Welcome to Vedcus Finance, where we uncover the hidden stories behind money, markets, and the global economy, one simple explanation at a time. Imagine waking up tomorrow and seeing this headline: "The government has paid off every dollar of national debt." It sounds strange, but there's a simple reason why. At first, that sounds like fantastic news. No more debt, no more interest payments, a fresh financial start. But what if I told you that such an event could actually create one of the biggest economic shocks in history? The truth is that governments are not expected to completely repay their national debt. In fact, most modern economies are built on the assumption that they never will. So why? Let's find out. Most people compare a country's debt to their own credit card or home loan. If you borrow money, eventually you have to pay it back. That's common sense. But governments don't work the same way. When a government needs money, it doesn't usually borrow from a bank. Instead, it issues government bonds. Think of a government bond as an IOU. An investor gives money to the government today, and the government promises to repay that money with interest in the future. But here's the important part. Those bonds don't just belong to wealthy investors. They are owned by pension funds that pay retirement benefits. Banks hold them as some of their safest assets. Insurance companies invest in them. Mutual funds buy them. Even other countries own them. In other words, government debt is someone else's investment. Now imagine a government suddenly decides to eliminate all of its debt. Where would it get the money? It only has a few options. It could dramatically raise taxes. It could slash public spending. It could sell national assets. Or it could simply print money. None of these options come without serious consequences. But there's an even bigger problem. If every government bond disappeared tomorrow, millions of investors would instantly lose one of their safest financial assets. Banks would lose reserves. Pension funds would lose investments that help pay retirees. Insurance companies would lose part of their portfolios. Financial markets would become unstable almost overnight. Ironically, paying off all government debt could create enormous financial uncertainty. So what actually happens when government debt reaches its maturity date? This is where many people are surprised. Most governments don't save up money for decades and then repay everything. Instead, they refinance. Imagine a government issued a 10-year bond. When those 10 years are over, it pays the original investors. But instead of ending its borrowing forever, it issues new bonds. New investors buy those bonds. The money from the new bonds helps replace the old ones. The debt continues, but the investors change. It's less like paying off a mortgage and more like renewing a long-term contract over and over again. This process has been happening for decades in countries all over the world. So if governments never completely repay their debt, does that mean debt doesn't matter? Not at all. The real issue isn't whether debt exists. The real issue is whether the economy grows fast enough to support it. Imagine two countries. Both owe $1 trillion. The first country's economy grows rapidly every year. Businesses expand. People earn more. Tax revenues increase. Over time, that debt becomes easier to manage. Now imagine the second country. Its economy barely grows. Interest payments keep increasing. Investors begin losing confidence. Borrowing becomes more expensive. That's when debt can turn into a crisis. So economists don't usually ask, can this country repay all of its debt? Instead, they ask, can this country continue managing its debt sustainably? That's a very different question. National debt isn't like a household loan. It's a permanent part of the modern financial system. Government bonds provide safe investments for banks, pension funds, insurance companies, and millions of ordinary savers. The system isn't designed for debt to disappear. It's designed for debt to keep circulating while the economy continues to grow. And that's why countries almost never aim to repay every dollar they owe. Instead, they aim to make sure their economies grow faster than their obligations. Because in the end, the question isn't whether a country has debt. The question is whether it can continue earning the trust of the people willing to lend to it. If you enjoyed this video, don't forget to like, subscribe to Vedcus Finance, and turn on notifications so you never miss our next simple explanation about money, markets, and the global economy.